Hey guys, John with TRD Trader here, coming back at you with another Set It and Forget It Sunday, or if you're watching this, Set It and Forget It Monday. As always, Cliff Notes, I like to sell puts for 1.5 to 2.5% return. If you do the math, 1% return over per week over a year would be 52% return. That is not taken into effect compounding, which if you compound it is probably 75% rate of return. 1.5 to 2.5% return is something like 150 to 250% return. So as always, you know why I like to sell puts, because it's high yield. I'm going to go ahead and go over the plays I looked at last week, and then after that we'll go ahead and look at the plays I'm looking at for this week. As always, nothing in this is certain. I believe that what I do is less risky than most things that you can do with the stock market, but that being said, there's some risk in this. And if you were paying attention last week, there was a development regarding a Chinese real estate developer, because one Chinese real estate developer is something like $200 billion in debt, and there's the potential for them going bankrupt. It caused a ripple through the entire stock market. Some of these stocks were really impacted by that. Others shook it off. And so even though I did a pretty good job calling floors, some of these stocks were not able to shake off that Chinese ripple. And so with that being said, my performance this week was not as good as it was last week, but I still feel it was pretty good. Not to delay, let's go ahead and go into my calls. So for those who may not know what selling puts are, basically you sell the right for someone to force you to buy stock, and in return for that you get a premium. I aim for 1.5 to 2.5% return. As long as you call the floors right, it's almost, you're basically getting free money. So let's go ahead and look at the things that were exercised. Now, of the exercise, which means you were forced to buy the stock, there's one bucket where you can immediately sell the stock for a profit, and then another bucket where you can't. And in those situations, I like to turn around and sell calls. Let's look at the bucket where you can turn around and sell your stuff for a profit. So I called MVIS at $12.50, and I said to aim for a premium of 41 cents per. So your basis would have been $12.09. MVIS dipped below $12.50, which is the historical floor. When I say historical floor, I mean like a rough average of a floor. A floor will fluctuate a little bit, but $12.50 is pretty close to a historical floor given the last 6 months. So it dipped below what I called, but it's above our basis. So we can turn around and we can sell stock that cost us $12.09. We can sell it for $12.28, get a 19 cents return, or $20. This is the stock right here, MVIS, where we can exit for a profit. Let's look at the two ones where we can't exit for a profit. These are Fubo and Workhorse. Workhorse particularly was impacted really heavily by the Chinese event, and it hasn't been able to quite shake off the effects. It's still lingering at $7.50. A lot of other stocks bounced back, but Workhorse has not been able to bounce back just yet. So Fubo and Workhorse. Fubo is a live streaming service. Workhorse is an EV truck manufacturer, and so I had called a strike price of 27 and a strike price of 8. The stocks fell to 25.42 and to 7.50. Our basis is way above those. If you were to sell right now, you get a $120 loss for Fubo and a $30 loss for Workhorse. So I would recommend turn around and selling calls. If you sell a $27 call, which is above our basis, if our basis is here, $27 is what I'm recommending. You'd be getting 32 cents per share, which by your original investment of $27 is a 1.2% return per week. Likewise for Workhorse, our basis is $7.83. If you sell a strike price for $8, which means if this gets acted on, the person forces you to sell your stock for $8, and if you bought your stock for $7.83, then you turn around and sell it for $8, you're automatically getting a 17-cent return per share. And then on top of that, this is where the weekly premium comes in. For this $8 call, you're making 14 cents premium per share, which works out to a 1.75% return. So even though I didn't quite call the floors on these events, how can I be omnipotent in knowing whether or not some random Chinese company is going to cause a ripple through the entire stock market? Even with that, even with me not being an omnipotent being, you in these positions, you can turn around and sell calls and still make 1% per week. So if a person had a high yield bank account and they're only making 2% a year, well, if you're stuck in the stock, now you can turn around and get call premiums of 1% per week. So already 2 weeks in, you're making more money than if you had a high yield bank account. So even when I'm wrong, guys, I'm still ending up to be profitable as long as you hold on to the stock. All right, now let's look at the things where I did not get exercise, which means I called an accurate floor. So the items that got, the contracts that expired out of the money: Academy Sports and Outdoors, Smith & Wesson Firearms, Blink Charging, Halliburton Oil, Marathon Cryptocurrency, Riot Cryptocurrency, Shift, which is car online retail, Six Flags Theme Parks, Tupperware, Kitchenwares Manufacturing, Viacom Multimedia Conglomerate, Hood, FinTech. You can see that I called pretty good floors. I called a floor of 42. It ended at 42.11. Called a floor of 20. Ended at 21.6. So on and so forth. So if you got in on any of these items I told you to, I recommended to sell puts on, you could have gotten anywhere from 0.5% return to almost 2.5% return. So once again, if you have an ultra high yield bank account and you're making 2% a year, if you sold this Blink put, you've already made more in 1 week than you would have earned in an entire year with your bank account. Or if you sell, this 6 put, and then you do that 3 or 4 more times, you make more in 1 month than you would have made in an entire year with this bank account. So you can see why I like this method, because it's a really good way of getting a high yield on your cash savings. All right, with that being said, these are the results of my 920 to 924 week. Let's go ahead and look at, just Freudian slip here, go ahead and look at the calls I'm going to be making for the upcoming week. These are the calls I'm looking at for the upcoming week. 927 to 10:1. Let's go ahead and filter this guy. Okay, so as always, the usual suspects here: Academy, Blink, Fubo, Halliburton, Marathon, MVIS, Riot, Shift, 6, Tupperware, Viacom, Hood, Workhorse, descending order, top to bottom. You can see I have various percentage chance of profit. This is a calculation that comes from an independent third-party website. If you go to this website here, optionsprofitcalculator.com, this is a third-party website that calculates the chance of profitability on naked puts. I sell cash-covered puts, which is more conservative than naked puts, so the chances of profitability is even higher. That being said, I use this as a sanity check. So you can see here's the first one, 15th October, ASO at 42 strike price, 185 premium, chance rate of probability of profit 66.1%. 66.1%. So as always, guys, I try to stay accountable and be above board, honest about everything, show where I'm getting everything. So you see I get, there's chances of profitability with the lowest being Workhorse at 65 and the highest being Hood at 84. No, I'm sorry. Fubo at 91. So you have chance of profitability ranging from 65% to 91%. I have various strike prices here: 42 for ASO, 28 for Blink, 23 for Fubo, 20.50 for Halliburton, 34 for Marathon, 12 for MVIS, 26 for Riot, 7.50 for Shift, 42.50 for 6, 21 for Tupperware, 40 for Viacom, 42 for Hood, 7.50 at Workhorse. Workhorse I'm paying close attention to. I thought it was a good stock to have a put on at $8. Now that it's at $7.50, I think it's an even better stock to have a put on. It has a rate of return of 5%, well, 4.25% right here. And I don't think it can, of course, I'm not omnipotent. I don't know everything. There's risk in everything. I don't always call these 100% right because you can see I got exercised on 3 stocks, including this one last week. That being said, at $7.50, I really like this. And I even have some stock I'm in a loss position at. And I'm going to go ahead, even though I'm up 35% rate of return in the last 5 months, I'm going to go ahead and liquidate those stocks that I'm in a loss position, some of which is in Workhorse. I'm going to go ahead and start selling puts so I can get this 4% rate of return per year, because I'd rather be selling 4% rate of return for the next couple of weeks rather than 0.25% for calls. So I get to keep, the stock either way probably, or at the very least, I turn around and start making a lot more premiums on puts. So I'm even liquidating some of my stock to sell puts on Workhorse this week. And I almost never liquidate stock to sell puts. Once I have stocks, I usually just stick to selling calls. But this week, I'm going to start selling puts on Workhorse because this is a healthy rate of return. That being said, I have rates of return from 0.7% per week all the way up to, not including Workhorse, 2.25% for Blink. So you can see these are pretty healthy rates of return. These are, pretty healthy chance of profitability calc. The 90% are the ones where I open up a little bit of wiggle room just because the stock's at somewhat of a historical interperiod high. And I don't know if it's going to fall back. So I open up a little bit of space to have breathing room in case if the stock falls. Where you see the ultra low chance of profitability calc, those are the stocks where I think that we're close to either what the stock should be or a historical floor. And so I'm willing to get closer to the current market price, which decreases the chance of profitability calc. But that being said, there's going to be greater market forces preventing the stock from falling even further. So that's why I'm calling some of these plays because these are the stocks that I feel I don't think the stock can fall much further, and there's a pretty great rate of return for some of these, especially Workhorse, Viacom, considering it's not very volatile. Same for ASO. 6 is also a good one. But yeah, guys, so these are the put options I'm looking at for the upcoming week. I'm going to go ahead and give you another installment on how to spot floors. Last week was MVIS. This week is Viacom. So MVIS was somewhat easy because the stock doesn't have that much history in recent years, and it mostly trades within a channel. Now I'm going to kind of show you a stock where there's not quite the same channel. There's the same channel activity, but there was a run-up of the stock that could cause a little bit of murkiness. So looking at Viacom, let's go Viacom chart. So if we look at a 5-year chart, you see generally Viacom was on a little bit of a downtrend. It mellowed out at 48, and then probably in 2019, probably because of greater pressure from Netflix and Amazon Prime and Hulu and all that other stuff, it decreased a little bit. Then it stabilized at 37. This is the end of 2019. We see it coming back up a little bit. The stock market as a whole is coming back up. Also, probably some of this is pre-election FUD, fear, uncertainty, doubt. So a little bit of pre-election FUD, and then the stock market starts to come back up. And then, bam, COVID Well, this is pre-COVID right here. Not sure what exactly this is right here, but right here, this is where COVID hits. The U.S. economy goes into a lockdown. Most of the world goes into a lockdown. All stocks fell. I know SeaWorld went from 26 to 9 in this period. So just to show you, if we look at SPY, which is an S&P 500 index, SPY has the same thing. In February of 2020, just gets clobbered. And then the stock market roughly bottoms out in the March to May frame, with the average stock picking back up in April. So we see that same thing with Viacom, where it just gets clobbered right here because of COVID fears. Bottoms out in April, starts to pick back up in throughout the fiscal year of 2020. So right here, this is a little confusing. Where's the floor? Is it here? Is it here? Is it here? Once again, when I was saying in MVIS, you want to try to find touch points. So there isn't really a touch point. It's just on a slow progression downward, a slow gradual progression downward. Here's a touch point. It's kind of touching at about 57, and it's bottoming at about 53, but then it falls again. And then here's kind of our last pattern before, election fears and then COVID. So it was topping out at 51 and bottoming out at about 45. So this was a good range before COVID. Then COVID hits, and then COVID destroys that. And then you see all of this noise. And then you see that there's a pattern here. So just looking at this, I would say if I was trying to spot a floor, I would immediately look to this data first, and then only look to this data insofar as to confirm this data. So looking at, and I would also research this just to know, you get an understanding of what this is. I would probably research this first, and then if you research this first, you'll find that a guy at Archegos Capital or something like that, he was running a family management firm, and he was highly leveraged with 5 or 6 different banks without telling them. And this one guy, he ran up this stock, Viacom stock, because he was bullish on it. He ran it up in the recovery all the way up to $100 per share. And I'm sure Wall Street Bets and some other people added into this as he was doing it. But this one guy right here, the stock was worth $101. He was highly leveraged with 5 different banks. And then because the stock was at $100, Viacom said, hey, let's go ahead and issue more stocks so that we can raise money for investment, and that'll drive revenues, right? A company's revenues is driven by its investments, and in investing in ways to deliver more products and services. So Viacom wanted to take advantage of this high stock price to issue more stock. Why would you issue stock when it's worth $13 versus when it's worth $100? So logically, Viacom, who wants to raise more money to compete with things like Hulu and Netflix and Amazon Prime and Fubo that's coming up in the world, it says, hey, and all those are streaming platforms, and Viacom's traditionally cable network, they got to try to find ways to compete. Viacom says, hey, let's go ahead and issue some more equity, and we'll benefit on this huge run-up of our stock, and then we can invest in our own company. That triggers a margin call at Archegos Capital. Those 5 banks liquidate his position because he doesn't have the money to cover his margin. And then they agreed to gradually sell off his position so as not to create a fire sale. But one bank sold all of it, and then the agreement fell through, and they all scrambled to get rid of the position so that they could maintain their liquidity. And this is what causes the plummet. So this is a one-off incident. This is not a normal high for us because one guy was highly leveraged who caused all of this. So you would want to ignore this. You shouldn't buy this stock expecting a $100 high. This is white noise, just ignore it. So we ignore this. Let's look at this data right here because this is stable, and it seems not only is it stable, but it's the most recent data, which makes it the most accurate. So let's go to 1 year. 1 year, we still see this, but we're getting a little bit more detail. So let's see if we can find touch points again. We see a touch point of 39, we see a touch point of 38, 39 right here, 39 right here, 41 right here, 41 right here, 40, 50 here, 39 right here. So right now 39 is looking like a strong floor of support. Let's go into 6 months so we can capture just this data here. 6 months, we're seeing a lot more touch points. This was immediately after the dramatic fire sale from the buildup. So even though you do want to pay attention to this 37, you should also know that this is biased because it's like a pendulum, right? If you go up really high, you have to come down really low. The market always overreacts. So this is a somewhat overreaction to the high of 100. So it's good, valuable data, but it's not completely accurate. So we'll ignore this for now. Now let's look at the other touch points. We're getting 39 here. Roughly 39. Roughly 39. Roughly 40.50. Roughly 42.50. Roughly 39.50. Roughly 39. Roughly 40.50. So 39.40 is looking to be a sweet spot. Now let's go back and look at before the Archegos build-up incident. Let's go back 5 years, and let's see if we can kind of spot a 39 floor. So here's a 39.50, and we're kind of seeing that when this stock began to bottom out, it bottomed out just below 39.50 before the election FUD and before COVID, and then we can kind of ignore most of this data right here. So 39 to 39.50 seems to be a good floor so far, just based on looking at the touch points. Then we can go and look at what the analysts are saying. Analysts are saying that this is a good stock at 40 to have. The average is 40, and at the current market price, 80% of investors, analysts, say to either buy or hold the stock at 39. So based on that information, I'm highly confident that 39 to 39.50 is a good floor. And then if we now look at the last, say, 3 to 6 months, if we look at the last 3 to 6 months, once again, we're seeing this 39 pop up, and then we're seeing highs of 41. So I know even though I should expect a floor of 39.50, if I get stuck with it, I can probably sell it in a month or two for 41, and I can probably make decent money selling call options. So yeah, this is how I would analyze a stock for Viacom. MVIS was really easy. If you look at MVIS, you look at my last video on MVIS. MVIS is really easy because it's for this time here, the last year. It's basically, you see an easy, almost a clear touch point here. This is really easy to interpret. It only went below this touch point once here. I think it might have dipped for a couple of hours here and here. And then with the China crap that's going on a little bit here. So 12.50, easy touch point for MVIS. Viacom, that's where you have to try to look at all information. Is this Viacom? No, that's a different company. Viacom, it's a little more difficult. You have to look at what information is causing white noise, determine what's causing that white noise, and be confident that that's what's causing the white noise. Disregard the white noise, and then pay attention to all of the other information. So this most recent data, that's more accurate because it's most recent, and then maybe a little bit of data before the election FUD and before COVID FUD. And I can spot this election FUD, or maybe it was a bad earnings from fiscal year 19, and then I can spot this COVID FUD because I've been paying attention to stocks for about the last 6 months. This is stuff you'll pick up on as you begin to pay attention to the market. If you pick a stock and you follow it and you see how it reacts to market news, you'll begin to learn as you start to look at these stocks. Oh, what is this dip here? It's probably this. What is this dip here? It's probably that. And then you can go and confirm later by researching. But yeah, I would almost guarantee that this is either bad fiscal year 2020 earnings which is probably the case because, as I said, Viacom is not as competitive. It's a profitable company, but it's not long run as competitive in terms of growth as Netflix, Amazon Prime, Hulu, Disney, as all those things are going to be. So this is probably bad fiscal year 19 earnings, and then this is combined with maybe some election FUD, but probably mostly earnings. And then this is mostly COVID, and this is the Archegos incident. So yeah, so in more murky situations, you have to do a little bit of research when it's not as clear as something like MVIS. So this is how I analyze the Viacom stock. As always, guys, so I went over last week's plays. I went over this week's plays. I did pretty good for last week considering the circumstances. I like some of the options that's coming up in the next week. I hope you learned something. If you have any comments, you want me to go over anything, feel free to message me or message in the comments below. Like, subscribe, and have a great day, guys. Thank you.